I have 3 brand new strategies that I want to share with you, and this is tick reversal. It's brand new. These other 2, gap continuation 2022, it's a new version of gap continuation, and Cobra III 2022, new version as well. I want to go over this to bring relevance to this tick reversal. Is this elevation and volatility you see in 2018 right here, that the volatility has been elevated on a point value, and this was not a gradual elevation. This was a quick ramp up, and it stayed there. And then in 2020, another quick ramp up, and it has stayed there. And so we talk about volatility based on point values, and we've looked at this on a percentage basis, and we've looked at it on a point value basis. And there are obviously volatility expands more in a step function instead of a gradual function. And so let's look at how that affects strategies. The way that I've seen this affect strategies over time is that it can change the patterns in the market. And new patterns can form. Patterns that were not working will work, and patterns that were working will not work when volatility ramps. And here is 2018, beginning of 2018 right here, when this reversal of this pattern begins to work. So the last 4 years, this pattern has worked pretty well, and accelerates as volatility expands, as measured by the number of reversals in a 1 day based on a point value. So this measures the number of 50-point reversals in 1 day, and obviously there's just a massive ramp up in 2018 and then again in 2020. And you can see this basically is a very simple strategy, and it's based on using the NYSE tick to find reversals. Traditionally, I use the NYSE tick to find trend and momentum trades, and since 2018 it's gradually become a better indicator for reversals, and since the beginning of 2021 it's done really well with reversals. You can see over the last 12 months this is 101,000, in 2022 36,000, 2021 63,000, and 2020 35,000. It didn't work that well before that, and I've put it in the portfolio calculator as it is, $25 round turn slippage and commission, and we'll look at the results going back 4 years as well, so you can see this. If you are in the all strategy access, you will get this. If you have the one of the micro portfolios, it may be included based on if this strategy is in the new portfolio. I'm updating new portfolios, and this may go out to micro portfolios as well. But if you have the all strategy access, you will get this. Let's look at it going back 4 years now. Okay, going back 4 years on tick reversal, see $100 average trade profit even with the $25 slippage and commission. Worst case drawdown about 12,000. You're using a lot of interesting exits that I've added to this. I'm going to show you that, talk about that here as well. And here is the equity curve. You can see an accelerating equity curve higher. We're at new index levels, and the pattern has just changed to be more favorable since 2018. And so it did not work before that because the pattern doesn't work before that, and I've seen that before. It's similar to if gap continuations work or if gap fills work. There's times in the market where gap fills don't work no matter what your parameter set is, and there's other times when gap fills just work really well regardless of your parameter set. So patterns phase in and out of the market based on the volatility, and the way this market currently is, and I think will remain, is very favorable for this strategy right now. And so you could trade this on micros as well, and I'll have a micro version also. I want to show you the inputs for this. So when we look at the inputs, one contract, don't trade on holiday, max daily entries is 3. We don't use the max daily losses. You can use that where it will have, once it has a certain number of losses per day, it'll stop trading. You could use that instead of this or in conjunction with that. For example, if you had 3 max daily entries and then 1 max daily loss, that means you'd only continue if you were winning. A daily loss limit, it has a weekly loss limit and a monthly loss limit. Those are based on closed trade parameters, and so it won't close a trade intra-trade once it exceeds that. And then you have long start time, long finish time, which is just basically first 5 minutes of the session. You start trading, and then you can take entries all the way until the last 15 minutes of the day session. and then you exit. We have an exit time down here 5 minutes before the end of the day session, and exit on close is set to true. And what you also have here is you have the stop loss long set to false, stop loss short set to false, profit target long set to false, and profit target short set to false. We are using these variable inputs here, and stop loss long range filter is true, and we look at the last days worth of bars, last 27 15-minute bars, take the average range times the point value, and we multiply it times this RF range filter long multiplication, 2.5 times that, and so that number is roughly around 2,500 when the average range of the last 27 bars on 15-minute bars is around 50 points. And so, and it also will have a max stop loss of 2,500. So if the average range is greater than 2,500, it caps that at 2,500. Same thing on the short side. You can change those parameters on the short side. We'll have them the same. Or you could use a percentage stop loss. This is a percentage not of your account. This is a percentage of the market move. So you have to distinguish when you talk about percentage. Sometimes it's a risk percentage of account. This is not a risk percentage of account. This is a percentage based on the market move. And so we are setting the profit target long, a 0.8% move. Profit target short amount, 0.8% move in the market. And so what you'll see here is a stop loss for risk is based on the range and the volatility. It's more finite, while we look to capture a percentage of the market move for the profit target. And then we exit at the end of the day. And so some different exits than we normally have, divided into longs and shorts. And so you could use fixed dollar amounts. You can use range filters for stop losses that I've previously discussed for the short and the long side, or you can use percentage stop losses and profit targets as well, percentage moves in the markets. And so that is the tick direction setup. It's more profitable the last 4 years on the short side. So you see $82,111 average trade profit, 18K worst case drawdown, and then on the long side it is $68,089 average trade profit. Does have a lower drawdown, obviously. So those are the that is the performance and setup for tick reversal Nasdaq. Once again, I'll be sending this out to all Strategy Access clients, and I'll also have a micro version that I'll work on next, and we may add that to the micro portfolio as I am doing a lot of research right now. Here's Gap Continuation 2022, and I want to share some things with you on that. Basically, the main difference here is that I'm going to go in here and go Studies, Edit Strategies, and show you how that works. Gap Continuation 2022, don't trade on holiday. We use one max daily entry. So in this portfolio setups going forward, we want it to be careful about how many strategies are real active trading during high volatility. So we may have a rule where we limit those. Some of our strategies trade very actively, and we want to limit that, especially overnight. Like our VSD strategy is very active overnight, and our adaptive moving average is very active during the day, but it's doing well. So sometimes active strategies work well. A lot of the same inputs as Gap Continuation 2019 and 2020. The only difference you'll see here is our range filter stop loss. It's not divided into long and short. So max stop loss is 2,000, and we don't have a multiplier. So basically, if you use the range filter stop loss, it's basically looking at a sub-data set of 15-minute bars, and the average range of the last 27 bars, last 27 15-minute bars. It looks at that, and it uses the stop loss times the point value, big point value of $20. So if there's average range is 50, then the stop loss is 1,000. If the average range is 60, then the stop loss is 1,200. If the average range of the last 27 15-minute bars is 80, then then it's 1600. If the last average range of the last 27 15-minute bars is 200 points, that's $4,000. We're capping it. This will override that and make it use a $2,000 stop loss per contract. Or you could set that to false, and you can use dollar-based stop losses and profit targets. We don't have a profit target, and so this could be further modified to have the same set of exits that I had before and tested as well. So that may be a future modification. This is what I have right now, and here are the results going back 7 months. $7,500 drawdown, 351 average trade profit using a $2,000 stop loss. We first started trading this before the pandemic. We actually had a setup where we would trade this type of strategy with a $300 stop loss. We increased that to $700 in the pandemic, and now we're increasing it to $2,000 even more because the volatility continues to climb. And so I think we're at a point now where it's not going to continue to climb at the same rate it's been climbing, but we'll continue to monitor that. And so that is gap continuation 2022. Here is the new Cobra III 2022. It's a 1 minute. Also notice all these use the non.D symbols. We're all on 1 minute, and they use a custom session US stock. And here's the performance going back 7 months. Largest losing trade is 1,400 with the slippage and commission. And so these are the results the last, I guess, 7 months or so. And you can see pretty evenly split between longs and shorts. As far as the drawdown is much smaller on the long side, 2,000, versus the short side, 7,000. So let's look at the input parameters on this and the new features. So edit strategies and pull that in here. Have multiple windows here. So don't trade on holiday, one contract, don't trade on holiday, use max daily entries, just one. You have the max daily losses, daily loss limit, weekly loss limit, monthly loss limit, long start time, long finish time. This is the time period in which it can enter into a trade. It can enter a trade between 9:45 and 15:30 Eastern time. Then you can exit at the benefit of a 1 minute chart is you can exit on that interval. Any given minute you can exit. Instead of on a 15-minute chart, you have to set it to every 15 minutes. On a 1 minute chart, you can set it to every 1 minute interval. So a lot of these parameters we've had for a while. And so stop loss long is false. Stop loss short is false. First bar stop loss is false. Profit target is still 1,400 and 2,900 on the longs and the shorts. And the range filter stop loss long is 1,400. It's true with a max level of 1,400. I found that through maximum adverse excursion. Stop loss short range filter is true, 1,400. And also have these profit targets as well for range filters. And percentage, I haven't tested percentages, so that could be another addition in this. And so these are similar. This turns off the range filter for entries because we have a range filter for the stop losses now. And so if you turn on the range filters, you could still do that, and it would take less trades. But if we are in a elevated market right now where it's going to be this volatile for a while, this strategy won't trade, and it doesn't really do you much good to have a strategy that doesn't really trade if we're at a new level of volatility. So that's the issue with using the range filter. If you use the range filter and set this to 27 bars and an amplitude of 50, and it won't do you much good because it probably just won't trade. You'd have to increase these parameters or turn this filter off and use one of these range filter stop losses. So those are the new setups. Again, we've had Cobra 3. This is the newer version of Cobra 3 2022, gap continuation 2022, and tick reversal, brand new strategy. I'm excited about this strategy. Don't see many strategies anywhere that have 100K in the past 12 months. So 100K in the past 12 months, and we'll see if that out of sample holds or if it falls apart. And so this is not a strategy that's in the portfolio yet. I'm just releasing it, and I may add this to the portfolio. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.